Hello, on this Thursday, July 3rd, 2025. Non-Farm Payroll Day today. Interesting stuff, because a lot of what I've been talking about recently has been the idea that if in fact this bull market is being fueled by the AI revolution, and the AI revolution is going to be the big game changer, and that's why stocks are so overpriced based on historic measures. But it's because it's discounting in this AI thing. If that is the case, then certainly one place that would start to get hit is employment. AI is going to replace the workers and all that. And I don't really care about that so much as I care about how does the market react to that. So yesterday we had a weaker employment number, and the stock market went down for about 5 minutes, and then it rallied straight up. So it did fight off that weaker number. And then today we actually had a little bit of a stronger than expected number, and the market went straight up on that too. So, which one's bullish, which one's bearish? Right now it's all bullish. And that's because it's a bull market, right? And people want to tell me, oh, it's not a bull market. Listen, you can argue with me about a million things, and I'm happy to listen. But a stock market that closes on all-time highs, in my view, can't be considered anything but a bull market. And that's where we are. Can it change quickly? Yes. But as of today, July 3rd, 2025, we are in a bull market. And as I've been saying on here pretty much every day, the market acts that way. Goes up on good news, doesn't go down very much on bad news. This is how a bull market is. The market tone continues to be very good. Are there things out there that are starting to get a little bit worrying? Yes. Positioning is coming in now. We'll see, of course, not this week because of the holiday, but on Monday, the new COT stuff. But as of last week, the stock position was coming in. The sentiment clearly has switched here. I wouldn't call it massively bullish, but it's definitely more bullish than it was. We saw the AAII number come out today. Much more bulls and much less bears than we've seen in a while. So we're getting to that point of probably neutrality in terms of positioning and and sentiment. So that's kind of stocks here, that's what it is. Today was a little different than yesterday in that yesterday, pretty much everything rallied. We had a little bit weaker number. Therefore, people start to expect lower interest rates. So things like gold and silver and platinum and even grains and basically everything across the board rallied. Whereas today we didn't have that. Energy went down today. Gold went down today. Silver did not go down today. Silver actually held pretty well. Tried to go down, as it does a lot, and came back. Platinum went down today. Went down quite a bit. Came back a little bit, but, And copper, the same thing, right? Went down, came back a little bit. So a little bit different than yesterday, which is to be expected. Yesterday was a weaker number, expecting lower interest rates, and today was a stronger number. So less expectations of lower interest rates. Tough time for bonds. Tough time for the curve. This yield curve steepening thing has been the no-brainer idea because people are expecting the Fed to cut rates, so the short end rates should come down, and the long end rates in that situation probably go up as they discount in future inflation and growth. And that trade got crushed today, which it should on a stronger number, quite frankly, because again, it lowers the possibility of interest rates getting cut anytime soon. So that all kind of made sense, I thought. You can see the 30-year was down a lot, right? But the 5-year was down even more. So curve flattened a little bit. And the dollar on that went up. Now, we saw some signs yesterday of dollar strength. In the end, it kind of failed. But after that weak number came out yesterday, which should have been pretty bearish dollar, let's do the euro. You can see the euro, it's hard to see on here, but went down first. But then by the end of the day, actually recovered. But today, of course, the news is fundamentally, arguably bullish dollar. So the dollar went up, euro came down. It's been nice to see that the yen is the weakest thing on the board, given that's where I am positioned. Continues to be the weakest thing on the board, has been the weakest thing on the board for a while, and continues to be. It's where the most crowded longs were. kind of interesting to see that the Canadian dollar went up today. Canadian dollar was starting to act weak relative to the others last week, and then all of a sudden it's right back. So it just shows you that sometimes, one day it looks like this because of the news flow, and the next day it just takes it out. It's what makes trading very difficult, obviously, and reading the tape very difficult. But as always, patience is the most important thing. And right behind that, risk management. Those are the two important things here, right? Discipline, patience, risk management. That's what you want to stick with for any of these. Any trade you make at all, right? But, that's pretty much the story, right? The main story being, listen, yesterday everything went up. Stocks, other risk assets, gold, silver, platinum, they all went up. Today they didn't. Today they went down, except for stocks. Is that because people in the stock market are too euphoric and they don't know what the hell's going on? Maybe. But I'll say this for the 1 millionth time. Shorting all-time high closes is not a very good risk-reward thing to do, right? If you want to make the bearish argument, it's fine. I got plenty of them to make. Like I say, the sentiment is changing quite quickly here, and all that. Me being a sentiment-based guy, that matters a lot. But you don't short it on all-time highs. If you think the market's going to crash, I say this all the time, that's fine. But you got a long way to go if it's going to crash. You don't need to short this close, right? You just don't need to do it. You're fighting the tape. I'm all about being contrarian, but we don't fight the tape. And a tape that closed on all-time highs is not a tape that we want to fight. Say it again and again and again and again. Okay? So that's really it. I hope everybody has a good long weekend, enjoys their 4th of July for those who celebrate. And for those who don't celebrate and don't live in America, please say a prayer for us over here because we could use it. And that's it. We'll talk to everybody that can join on Monday on the COT call. All right.
Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.